Hi, welcome to Beers with Rich. I'm Rich, editor of Under the Radar Report. Well, this week's episode is brought to you by this little special, extra special bitter, Geezer Pleaser from the R-rated Little Bang Beer Company, which of course is from somewhere near Adelaide. No segue to stocks. It just caught my eye. Let's have a toast. Ooh, looks exciting. Adelaide's finest. It's not bad. R ratings give you a bit of that extra spice. Well, what else caught my eye? Sorry, a segue after all. The new uranium stock we uncovered. Well, I promised you a uranium stock. I promised it for subscribers, and we delivered. An emerging gold stock that has huge platinum potential. Talk about that a bit later. And of course, the country's biggest bank. Which bank, I hear you ask? Well, that's right, the CBA. Here's to Matt and the people at CBA doing their best. Unfortunately, their best wasn't good enough in the eyes of many. CBA fell almost 10% this week after its September quarter delivered $2.2 billion. Even that failed to excite. What's going on? Well, it's no accident that the two biggest retail banks in Australia are under pressure, with all those mortgage brokers running around trying to get business. It's as cutthroat as ever, and that precious net interest margin is coming down. You know, they talk about return on equity. Well, I think the market looks through that at the net interest margin in terms of, future profitability. But seriously, we've been taking profits on CBA. I mean, basically, it's been priced like a growth stock. But the reality is, after the changes, preempted by the Hayne Royal Commission in 2018, these banks are more glorified building societies now. They're utilities. They're not growth stocks. You're not going to pay 25 times for something that's going to grow profits sub 10%. But these are core holdings, right? And I want to tell you out there, don't panic. So if you've got, CBA in your portfolio, it's it's going to be there forever. When you're making $2 billion a quarter, that's not a bad business. So on the banks, we've preferred NAB, I guess, because of its business banking hedge, and we picked Westpac, although that's gone a bit awry because it's cheaper. But on the smaller side, we've actually made a lot of money with Money3, the automotive lender. So they've built their market share up from 1% to 2%. Who knows? They might get 3% of the entire market. Whichever the case, the point is that these small caps have a lot more potential. We'll be covering Money3, but that stock's performed like 30% a year in the past 3 years. Like, that's more than double the return of CBA. And CBA, even after the recent fall, has been one of the best performing banks, probably in the world, actually. But look, let's have another toast to the power of small caps. Here's to those guys at Money3. Well, on to the radioactivity world. As I was mentioning before, we've found a uranium stock, just in time too. Uranium futures price is at now at $48 a pound US, up from just over $40 the last time I talked to you. And it's only $2 short of its recent peak of $50, something like a month ago. The trend is your friend, as they say. Look, we like this stock because it's in a position to take advantage of this, increasing price for uranium. So it's got a tried and proven operation. They've produced at the right specification of uranium for utilities in the past. So it'll be restarted for as little as $50 million. Might sound a lot, but if you compare it to like Bannerman Energy, which we cover next week, Bannerman's greenfield project, so that's starting from scratch, is projected to cost around $300 million. So, like really, these sort of companies that can ramp up operations quickly are going to be the ones to take advantage when the nuclear trend keeps going. But look, I mean, speaking of trends, you can't go past inflation now when you're talking about stocks. And one of the beneficiaries of inflation is gold. And gold's up around US $150 in the past month. And that month has included the US printing an annualized inflation number of about 6%, 6.2%, I think. So, this optimism in gold is really helping our portfolios, which include Northern Star and Evolution, Panoramic and Oceana Gold. So these stocks get that leverage effect, and I think that's an important point to make. So they get the benefit of the growing price and also of growing production, and that's where you get your valuation uplift. Investing in companies, I think, is better than investing in gold. Like, people often ask me that, or in a gold ETF. You can make money from investing in these gold stocks even when the gold price is flat. As I've said, like, when a company's growing production, that's a very important trait that investors like. And also what you get is the management effect. So we've successfully backed Bill Beeman in the past. We've backed Jake Klein, who's recently made another acquisition at Evolution. So we're going to be covering that in the next issue. But there's also that built-in growth that you get from the acquisitions when they're done correctly. And that's what both those big performers, Northern Star and Evolution, have done well. So we're going to be talking about that one. But I'll tell you what got our mining analysts really excited. Boy, I need another sip of Adelaide's finest when I talk about Peter Chilton getting excited. This is probably more on the speculative side than Evolution, or certainly more on the speculative side than the others I've mentioned. Pantoro. I mean, it's a gold producer, but it's growing its production impressively. It's got 50% of the Norseman field, and like, basically this stock's valuation, even after the recent uplifts, is really based on gold. But what it also has now is this huge potential in platinum. So I don't think there's been any big platinum finds in WA. I'm not sure, I could be wrong on that. But they've always talked about the prospectivity of, I mentioned Norseman's, but of its area where it's producing now, which is Nicholson's, in the Nicholson's mine area in the Kimberleys. So it looks like they could have hit something special. Certainly the neighbouring mine has a big resource. So the signs are looking good. The issue is whether it's commercial. So we'll be closely following this situation, but we won't know for a while. But platinum price is helping. That's up at $100 US, over $100 US in the past month. So we drilled down on the detail in the latest report, but we'll be following it very closely. So it's really exciting times, is what I guess I can't emphasize enough. What have we got next week? Well, I guess next week requires me to have another sip. It's actually not bad, Not bad. Here's to all our British friends. Next week we celebrate a decade, yes, 10 years of our small cap portfolio. So I like our small cap portfolio because it's conservatively managed by the idle speculator, but it also has that growth. I mean, if you have irons in the fire, I know I've mentioned that a few times, one of them's going to go off, and the key is how to build a portfolio with all the key attributes. So our portfolio manager takes you through how to build up a portfolio which has had the same sort of success as his, which is almost doubled in value over the past 5 years, versus the index, which is about half that. So we also cover another uranium stock. I mentioned it, Bannerman. Yes, another one. And we cover Money 3, but we also cover one that's not performing quite as well, Callium Lakes, Evolution Mining, and many others. It's exciting times in the arena of small caps, and also, with what's happening with inflation and the banks. So here's to another strong week at Under the Radar. Cheers.